Welcome back to the channel, folks. This is Jason, certified financial planner, host of Fighting Words Financial. And today, guys, I really got to start off with my disclosure right off the bat because we're going to be talking about Nio and dead investors. I'm not saying that people invested in Nio died. I'm going to talk about what dead investors can teach us about investing in Nio, okay? But first, let me give you the disclosure right off the bat. I'm going to talk about Nio today. I'm going to talk about trading around Nio stock, but you can't take anything in this video as advice for you as an individual to go out there and buy and sell and hold any security whatsoever. And I'm saying that because in this video, I'm probably going to be walking the line a little bit as a professional as far as what I can say in a YouTube video. Financial professionals have a lot of rules in their profession regarding what they can say on social media. All right. So that's my disclosure. That's out of the way. Let's talk about Nio and let's talk about what dead people can teach us about investing. All right. So let's talk about Nio stock first. It's been an incredible run over the last year, like absolutely incredible. And if you've been watching my channel for a long time, at least for 6-7 months or so, then you probably know that Nio is a significant portion of my overall net worth. And to be honest with you folks, that was an accident. I bought several thousand shares for next to nothing, like $1.63 a share when they were in trouble. It was kind of a throwaway gamble. It wasn't an investment. It was pure speculation. It was money that I knew I could lose. Honestly, it was money that I thought I probably was going to lose after a month or two because it declined a little bit and then it kind of like flattened out and it didn't start to rise for quite some time after I made that initial purchase. And I was actually underwater for months. Months and months and months I was underwater on that after my second purchase, right? My second purchase was something like $3 a share. Months and months I was underwater on that. But anyway, I did not have faith in the business at the time. Not at all. I didn't have faith in their vision at the time. It was completely a throwaway investment. So literally, you can chalk up my interest in Nio to luck. You can chalk up my success in being an investor in Nio to luck. But a lot of what you can chalk that up to is not necessarily luck, but the buy and hold strategy as well. And this is where we get to what dead people can teach us about investing. All right. So as a financial professional, you may have heard this rumor. If you're a financial professional as well, you may have heard this rumor in the financial industry that Fidelity did this long-term study of the most of the accounts that perform the best, and they found out that the accounts of dead people and inactive accounts were the ones that outperformed, the living people and people who were actively trading. Now, so there's no actual evidence that Fidelity did this study, and this could be an urban rumor, but this is a very persistent one. But also, let's think about this. We know from volumes and volumes of academic data that buy and hold investors outperform active investors, right? Meaning even the most educated people out there with fancy Ivy League degrees, hundreds of billions of dollars under management, and people who really believe in their power to pick stocks, these people cannot outperform their underlying index over any 5-year rolling period, right? They can do it once, but they usually can't repeat that. And that is not a statistic or something that I pulled out of thin air. There's something that exists out there. That's research that's done by S&P, the same people that created the S&P 500. It's called the SPIVA Persistence Report. And it's almost a statistical guarantee that if you have a mutual fund manager or ETF manager that outperform their underlying index in over any 1 5-year period, that they're going to underperform it in the next 5-year period. So all of you folks who are Cathie Wood worshipers, and trust me, to a degree, that's me too. Like, I love hearing what the lady has to say. I love hearing what she's thinking about on different industries. I tend to agree with her. I tend to be shocked by her insights more than I agree with her, right? It's arrogant to say that I like someone just because I agree with them. I'm shocked by her insights in a lot of cases. But are they going to be that top tier investment company over the next 5-year period? I don't know that. And history would actually tell me that ARK Invest won't be, right? That's not to say I've sold any of my ARK Invest mutual fund or ETFs. I haven't done that, right? But what I really wanted to talk to you guys was short-term strategy right now surrounding Nio stock. I personally am not going to be disposing of any of my Nio stock, even though we're kind of at a high again. It would make sense to some people out there to take some of that profit that I've made off the table, pay some taxes on it, and maybe re-enter at a lower price. That's something I won't be doing, largely because like I said, there's reams of academic data out there that will tell you that active investors, you will make, the worst thing that can happen to you is if the price goes up to 60, you sell, you wait for 30 days, and then you buy back at 40. And the worst thing, that's the worst thing that can happen to you. Why is that the worst thing that can happen to you? Because you will credit your success to your own ability to stock pick, your own ability to time the market, when reality is you probably just got lucky, right? You couldn't predict that the reason, let's say the reason that, one of the reasons right now that Nio Stock is declining is because of the things that the Chinese government is saying in Chinese media right now. The Communist Party is coming out a little bit aggressive, a little bit of, basically kind of, beating their chest right now regarding Hong Kong and a couple of other, regions with trouble in Taiwan. They're celebrating the 100 years of the Communist Party, that sort of thing. That's caused some negative sentiment in markets in China, and that's caused a little bit of a decline in stocks today. That could be one explanation, or it could be profit taking as well. These are things that you can't really predict over a long-term basis. And the worst thing that can happen to you is you get it right once, you get it right twice, and all of a sudden you think that you can predict market cycles, So it sounds ridiculous when you're saying it out loud, but there are millions of people out there that believe that they can predict which way the market is going. They believe that they can predict what, the price of a certain stock 6 weeks from now or something like that. There are millions of people out there that believe that, when there is just tons and tons and tons of evidence out there showing that none of these trading strategies work. Technical analysis doesn't work. Market timing over time doesn't work. You're going to get lucky once or twice, and it's going to create a cognitive bias that will take years to break down, or you may never even realize that you have. So if you are thinking about trying to time a little bit, a Nio Stock here, trying to sell out of a high point and then buy back in at a lower point, it's not something that I'd recommend. And I think that it's going to set up a sort of dangerous mental pathway for you when it comes to investment. Look at the research that's out there, folks. Buy and hold investors, index investors simply outperform active investors over time. It doesn't matter if it's your grandma who's had her Vanguard account since 1972, or the hedge fund manager who manages $130 billion. Neither one of those folks can actually outperform their index over time. Anyway, that's what I wanted to say today in a quick video. This is what dead people can teach us about investing, that buy and hold investing is probably the best way to go. Don't try to time the market. And really, when it comes to stocks, just don't overthink things, guys, right? You have a long-term vision of where you think Nio is going to be, right? Nothing in the last 6 months has really changed what I think Nio's prospects are for the next 10 to 20 years. And that's really what I'm focused on. And I hope that's what you're focused on too. Anyway, folks, that's my message today regarding, it's a really long and convoluted message today. Thank you very much for listening and taking the time. Check out my Patreon if you get a chance. It's $5 a month. I could really use your support for the channel. Also, don't forget to subscribe and to like this video. Thank you very much and have a nice day.